why you should never blindly follow someone's investing advice. In this video, I'm going to break down why it's so important to take everything you read, hear, from your friends, your family, people online, and just take it with a pinch of salt, or take it, interpret it, and then generate your own alpha off the back of it. This is according to my own research. If you do want to keep up to date with financial markets and see my take on things, another, information source you can interpret, I do have a free newsletter. Link to that will be in the description. Not everyone is you. Advice, from somebody, their goals, their risk tolerance, their timeline, their situation is so different. Someone could be comfortable holding for a 40% drawdown. If he's giving advice to somebody who panics at 10, it's difficult for that person. It's difficult for them because they've got two different, stomachs, I guess would be the best way of putting it, right? Their timeline's different. If you've got a guy in the 60s giving advice to a 25-year-old, it's completely different. They're at different, stages of their life. There's so much difference in there, so that's a really thing. Timelines are really important as well. Like, your dad might be in bonds because he's low risk and he wants, low volatility for whatever reason. Whereas you're younger, you might be all in on, tech stocks or AI stocks like AMD, Micron, and all those rubbish stocks. Now I'm joking, but those are things to consider. And their financial situation is different. Someone with 6 months of emergency savings, no debt, high income can afford to take probably more risk than the guy, someone with no cushion or significant outgoings, or somebody who's living more paycheck to paycheck. So everyone's financial situation is different, and their goals are not yours. Their goal could be wealth preservation, and yours could be to maximize, wealth, generation, your income. You could be doing these things that are crazy to the other person, right? So everyone's different. So you've got to, okay, cool, I understand that, but where is he at in his life? Is he in a similar stage to me or not? Something to consider, but not everyone is you. Everyone has different investing goals. Retirement planning requires, a completely different approach to short-term wealth building. If you're, okay, cool, I'm going to think 40 years ahead. Okay, let's say, for example, 40 years ahead, I'm going to think towards my retirement. Or you could say, this decision is going to be a 5-year decision. That could be, you move location to where rent's a bit higher, but the income potential is higher. And then when you're thinking maybe in 40s, you're thinking, right, where can I live, which is, good cost of living, good salary. These are all different things. That's not even investing related, but everyone's goals are different. Income generation and capital growth, they pull in opposite directions. An investor who needs their portfolio to generate regular income will make it very different decisions to the guys maximize that long-term growth. Dividend strategies, bond allocations, withdrawal plans are relevant to somebody in the accumulation phase. So, everyone has different goals. Your relationship with risk is personal. That will change over time. When you're younger, you should take more risk, and you will probably take more risk. When you're older, you'll be a bit more conservative. And knowing your goal is the filter that makes all advice useful and non-useful. So you can really kind of think, okay, cool, what this guy's saying, he's at a different stage of my life. Part of it's true and it's not. So once you can decide what your goals are, where you are at in your life, you can really make those decisions. There are too many ways that work. There's so many ways to skin a cat when it comes to investing. Value investing works, growth investing works, trend following works, index investing works. People say many approaches work is right to a degree. Value investing and the momentum trader can be both right, but they're in two different paths. They're in two different parts of the market. They're looking for different things. The long-term holder and the active trader can both build wealth. All right, you look at the hedge fund managers. There's out-and-out value investors like a Warren Buffett or a Howard Marks. I know he's more into distressed bonds or distressed debt or whatever it is. You've got these type of people. You've got Bill Ackman, a value investor. Then you've got maybe more of your macro guys like Stanley Druckenmiller. They're doing the same thing, but they're doing it in completely different ways. There's so many different approaches to do it. The failure models typically are the same. I think there was a video of Mark Cuban saying there's 1,000 ways to go to financial heaven, but there's about 10 ways to go to financial hell. And people succeed in many different ways, but they tend to fail for the same reasons. No plan, no discipline, reacting to emotion, following someone else's strategy. Understanding the common failures. They're all common. They're usually within the same tree. The same mistakes. If every approach can work, then the approach matters less than the execution, right? So consistency, discipline, and understanding your own situation determines what's best for you. So look at everything. There's so much information out there. What are your goals? What will work for you? What can you stick to in the long term? They should be kind of what you should be sticking to. Look, the flashier the content, the more likely they are selling something, right? So if somebody is, doing a video, driving a supercar, usually rented, showing off something, they're usually just selling you a course and they're getting rich from selling that course. If it's a bit more boring, a bit more reserved, typically they're probably, I wouldn't say more legit because that's just like a stupid assumption, but their goals may be different to the guy who's renting the Lambo because it doesn't cost too much to rent a supercar for the day, right? So the more certain person sounds, the more certain somebody sounds, the more skeptical you should be. So when it's like this indicator will print, it's like, will it? Or have you just got a 10 moving average that you've just coded up or like color coded? When it's bullish, it's green. When it's bearish, it's red. Because that's something you can easily do. Markets are uncertain. Anyone who presented their approach as the answer, typically it's not the answer. The answer, is to run away. An ideology is not a strategy. Someone's content is built around a worldview. Markets are rigged, institutions are corrupt. Only one asset will survive, and and it makes great content and it gets the name out there. There's so many big names out there in the investing world who are they're just selling a course. They're just doing these things, and they may be good though. That's the thing. You never know what's real with content. But I do think the best advice tends to come from less flashier places. I was listening to earlier this evening, the podcast with My First Million with Howard Marks. Howard Marks for 45 minutes just talking like this. Sampar and Shan. I can't remember Shan's. I believe it's Shan. I can't remember Shan's surname, but it's just Howard Marks talking, and it is like, oh my god, this guy's so smart, and he's got obviously the track record and everything. But if you just listen to him, you're like, yeah, this guy's legit. You can just tell he's just a guy talking, great ideas, great thoughts. And then you've got other people who are like, oh yeah, I was working behind the shop counter, then 2 years later I was making millions trading. It's like you've got to just take it with a pinch of salt online, but typically the less flashier, you can tell somebody is probably very interested, but you can usually just tell what comes out the mouth. But the difference between showing a view and telling what to do. So this is something that's really important to, I guess, think and mention in this presentation, because sharing a view gives you a data point. Telling you what to do removes your thinking, and you want to be always thinking. You always want to be in control. When someone shows you what they're seeing and why they're seeing it, you can assess it against your own judgment. When someone tells you you have to do this and you must do this, you're outsourcing the decision making to them. When you're putting money on the line, that's not something you want to be doing. You cannot learn from advice you cannot understand. If a trade works and you don't know why, there's no way you can improve. If you did something, you don't know why you did it, but you made money, that's not, I would say, a great thing. If you maybe lose money, but you know why you did it and all that stuff, then yeah, that's something you can actually take and improve moving forward. And the goal is to develop your own judgment and not to borrow someone else's. And for me, kind of with my channel, I'm not here to tell you what to do. I'm here to show you what I'm seeing and why, and that's kind of what's related to my newsletter. So I don't want people to start, see me talk about something or do this and act upon it. I want people to, this is a view, agree with it or don't agree with it, but this is what I'm seeing, and there might be something relevant for you, or there might not be. You've got to have that approach. When you watch this video, I'm telling you a view, believe it or not, that's what you've got to think. So how to use other people's research without blindly following it. Use other people's research as a starting point, not a conclusion. I say something, someone says something in a podcast, someone says something here. When someone highlights an asset or a setup that's useful information, it points you towards something worth maybe researching and looking at on your own accord. And then you make the decision. Whether you act upon it, is down to you. Ask yourself why before you act upon that piece of advice. If you see the flashy guy online, he's like, Forex is the best, Forex is goated. Do a bit of research. Ask yourself why. And track the advice you follow and what happens. Most people, I think, when they start to consume content, they find them couple investing people that they start to like and they start to gravitate towards. So track that advice. You'll start to get a good judgment of what's good and what's bad, and then you can make good progress, because there is a lot of good information out there, but there's also a lot of rubbish information out there. And the best, use of someone else's research is to challenge your own thinking, not to replace it. If somebody's saying, I think I saw Bill Ackman was buying Microsoft, I think I saw earlier in the year, or a month or two ago, and I was like, I would not be buying Microsoft there. He's challenging my beliefs. But it's like, okay, cool. Well, I guess, if I go into an office block, everyone's using, Office 365. It's a Microsoft product. Okay, cool. Yeah, they're probably here to stay because they've just got so much in there. But I wouldn't buy it because I'm a bit more momentum investor. So, you want to take someone else's research and opinion to challenge your own beliefs and make you kind of open your mind up a bit to another possibility. The verdict. Not everyone is you. Everyone has different goals, timelines, and risk tolerance. Almost all investing advice is valid to a degree. That makes it harder not easier to follow, right? So because so many approaches work, you can't almost pick and choose. You've always got to take it all in, make decisions, and use other people's research as an input and not a conclusion. If you do want, a bit more insight into what I'm doing, I do have a free newsletter. Link to that will be in the description. Thank you very much for watching, guys. See you in the next one.